So I hope you can all hear and see me well. I have some charts prepared for you with regards to the Eurozone CPI data. Now, first and foremost, you can see how the indicator has been developing over the past 12 months, and of course, the anticipated forecast according to a survey conducted by Bloomberg, as well as the previous data, 0.9%. What we should definitely say about the Eurozone Consumer Price Index is that inflation, or actually lack of it, will again dominate the economic discussion today for Europe, and for actually not the right reasons. The risk of deflation continues to lurk in, although today's update would probably look a bit less threatening compared to the previous report. According to the initial read for November, inflation moved up from the lows, reaching 0.9%. The European Central Bank cut its main interest rates by 0.25% because of this low inflation rate of 0.7% in October. A 1.5% yearly rate is expected to continue during the next year, before easing slightly to 1.4% in 2015. CPI is expected to climb, as mentioned, 0.9%, while core CPI is predicted to gain 1%. In addition, we should also say that the European Central Bank is actually assuming that inflation will continue to fall in the near term. In its latest monthly report, the ECB projected that consumer prices will rise 1.1% next year, down from a projected 1.4% for all 2013. In both cases, the forecasts are slightly below the predictions published in September. What we can also mention definitely about the data and the forecast is that over here we have here a list of economists that were, well, some of the economists that were actually that were conducted, that were surveyed by Bloomberg, and actually they're pretty much unanimous in their decision at 0.9%. So I guess they were rather concrete on their decision. In addition, what we can add is that BNP Paribas warns, though, that Eurozone inflation has fallen to a discomfort zone. A report issued by the investment bank Friday warned that there is a risk that inflation could swing into negative territory, with the prices declining rather than simply slowing, or that it might already be negative given measurement uncertainties. The strengthening isn't actually the strengthening euro isn't helping. The stronger currency is taking a toll on Europe's exports, and we do know that it's definitely very important for the region. Last week's news on Peugeot hefty loss due in part to a stronger euro, for example. And as concerns today, the anticipated data for today, well, the update isn't likely to bring any massive surprises relative to the flash estimates, but the uncertainty and risk about inflation aren't really disappearing. They're still present, and they're expected to still be present for quite some time. So that's about with regards to some of the fundamental aspects that you should be aware of, and now we would like to move on to the technical aspects, and Alex will talk about technical analysis and the potential negative impact on the euro.
Hi everyone. So now me and my colleague Thomas will be discussing the most interesting part of the news release, as Gita said yesterday. And as you can see from my slides, I'll be speaking about the negative surprise trading strategy, which is based on Euro USD. So in case we'll have worse than expected data, for example 0.7%, that was, if I recall correctly, the lowest since 2008, that will mean that the ECB will need to make further adjustments to its policy, and then the euro will have a great potential to depreciate. So as you can see from the screen sharing, the pair is currently trading in the boundaries of the channel at pattern, which was formed late November, and it's currently 65 bar long. However, the pair is currently trading right at the pattern support line, and in case we'll have worse than expected data, then we can assume that the pair will be able to breach this level and will head towards the potential take profit, which is recommended to place at 137.47, which is represented by a weekly pivot. Yeah. Meanwhile, the potential stop loss could be placed around 138, which is first of all strong psychological level, the recent high, daily resistance, and weekly resistance as well. And speaking about the pips, sorry, my platform just froze for a second. Okay, that will be a short-term strategy with the range stop loss is placed in a 32 pips range, while the take profit is placed just 21 pips below the market price. And that would be a short-term strategy, while in a longer term the pair is still has the potential to reach another take profit at 137.10. That will be a recent low, while in this case the stop loss can be placed around daily resistance at 138.32. Yeah, and so as you can see from the slide, the pair is currently bought in a slight majority of all cases, with this 60% of all open positions being short. Meanwhile, the single currency is sold in 57% of all cases, while the greenback is bought in almost 60% across the board. And if we assume that the pair is likely to go to the south, then we have to look at the pending orders, and as you can see, 65% of them in the 50 pips range are placed to sell the pair, while in the 100 pips range, 55% of pending orders are also placed to sell the pair, meaning that in a short and medium term, the pair is likely to get some additional support from the pending orders. So, meanwhile, technical indicators are sending sell signals only on the 10-minute chart, suggesting the depreciation of the pair in the short term. However, in a longer term, indicators on the 30-minute, hourly, 4-hour, and daily chart are pointing to the opposite direction. However, I would like to stress out that MACD indicator on the 4 different time frames is sending sell signal, meaning that market is overbought already, so we can expect a period of a movement to the south. And by the way, currently on this is the 1-minute chart, and as you can see, the pair is fluctuating in just 20 pips range, meaning that markets are waiting for the news release. So we still have some 6 minutes left before the data, and I guess I will give the floor to my colleague Thomas, who will be discussing the positive surprise trading strategy. So welcome, Thomas.
Thank you, Alexander. Hi, everyone. Now let me put myself on the whiteboard. So yeah, I will be presenting a possible positive trading strategy and I will be doing that on the Euro Swiss franc, which is maybe not that famous for high magnitude moves. However, employing leverage, you can achieve quite a substantial results on it. Let me turn on my screen sharing, and what you'll be seeing now on the whiteboard, it will be wrong technicals. It is Euro Swiss franc 1-minute chart, and now just let me upload my technicals, right? Where is it? Here we go. So yeah, first of all, I guess I will stick to the possible trading strategy, which is based and supported by a few ideas. First of all, is that currently Euro Swiss franc is strongly bullish. It is 74% of all traders are long on the pair, and 68% of pending orders in the 50 pips range around the current market price are actually set to go long as well. So in case in some sort of volatility, there will be a substantial support for the pair as well. Now, what we're seeing on the technical indicators in the most relevant short-term horizons, we're seeing a rather neutral outlook on the pair, maybe It's worth pointing out that we do not get a clear indication about the trendness of the current trades, and I don't find that very surprising, as let me zoom in a little bit. You can see that there is some sort of minor uptrend going on right over here. What's going on then? There is a very short-term downtrend and some unclear downtrend is right over here. So, you know, technical indicators as for trend lines, as trend lines are concerned, actually are rather ambiguous. And this time, major turning points do not predict any much. Maybe 30 minutes we could pay attention to the stochastic, as there is substantial, I would say, pressure on the pair. But I also do not find that so conclusive or very illustrative in this case, as you will see that daily high, for example, was reached, what now, 15 or 10 minutes ago only. 25 minutes ago, and that will be right over here. So therefore, apparently, of course, the trading activities and the technical side of the calculations step in right over here. So now for the possible take profit, as I mentioned, not high magnitude, therefore it would be at the daily high at 1.22177. Right over here, that would be around 2 and a bit pips above the current market price. So I guess I should zoom out a little bit. As for medium term, you could be looking into the weekly pivot point, which is 11 pips above the current market price. But like I mentioned, I don't really think that due to the nature of the moves and magnitude of moves in Euro Swiss franc, I really doubt that PPI numbers will manage to kick it so high. So I would stick to daily high, as I mentioned, 1.22177, and for stop loss it would be as for example this trend line right over here is a little bit I would say too low, taking in mind the possible gains. I would say maybe stick to the arbitrary number at this point, maybe 1.2213, as this is pretty much, well, very, very recent dip of the pair, after which is what you can see was a sell-off and then a substantial bounce from it. So maybe that indicates quite a few actually buy orders are posted right over there. So just to what we have 20 seconds to the release of the data, you can see therefore stop loss at 1.22129 and take profit at the daily high of 1.22777. So now let's see what we're seeing. Of course, increase in the volatility of the trades. Usual, you see data coming out. Actual 0.9, so mostly as predicted. I guess therefore we won't see any substantial reaction from the market, and I'm pretty sure it might be that it won't really even reach the daily high and won't fall below the mentioned stop loss of 1.2212.9. As the pair, as I mentioned, the data came out mostly as expected, as predicted. Therefore, we're just going to see increased volatility and traders wrapping up their positions. You know, not willing to be exposed to this currency pair and overall in general. As well, it's rather, of course, sad that we didn't see any major moves right over here. And in general, I guess yesterday's idea from Dow, I guess it was that you know, before Christmas, end of the year, a lot of traders will be very cautious on wrapping their positions or trading on the data, unless, you know, some substantial numbers come out, as you know, you finish the year in the green and you don't really want to lose it in the next couple of days. What we're seeing now, of course, we're seeing some bearishness, as most likely we could interpret this as, you know, the traders were expecting at least some sort of guidelines, clear view of the state of the economy in the Eurozone. However, they received numbers which were largely expected and pretty much, just shows the trend line. Therefore, this sort of undermines their perception of the possible good in the economy in the Eurozone. Therefore, as I mentioned, they just closing out their positions and pushing the pair a little bit lower. So this sort of speaks about the fact that a substantial amount of traders actually were long on the pair, as closing it means selling it at a little bit cheaper price. So yeah, as we can see, 122.12.9 actually reached. So I guess I can remove it, and it seems that pair might actually stay into this downtrend, which is highlighted right over here by this red line right over here. Yeah, and I don't really think we'll be able to see any substantial other changes in the nearest future. As I mentioned, end of the year, a lot of traders who are in the green want to keep it that way, and therefore avoid, of course, opening substantial positions which might have significant impact on the pairs. So I guess that will be all from my side. If you have any questions or remarks, feel free to share. Yeah, and I give floor back to you, Gita, to wrap it up.
All right, great. Thank you, Thomas. Thank you, everyone, for joining us today. Hope you were able to learn something new with regards to the economic data release. And in the meantime, have a great day and hope to see you today at our 12 GMT Dukascopy research webinar.